Have you ever wondered how a single policy decision in one country can shake the entire global economy? Right now, Japan's economy is feeling the pressure of rising global trade tensions, especially new U.S. tariffs on key goods. This has led the Bank of Japan, BOJ, to cut its economic growth forecasts, signaling tough times ahead for the world's third-largest economy. In this video, we'll break down what's happening, why it matters, and how it could affect not just Japan, but the entire global financial system. So, let's get started. What did the Bank of Japan announce? On May 1st, 2025, the Bank of Japan lowered its forecast for Japan's economic growth. It now expects GDP to grow just 0.5% in 2025, down from 1.1%. For 2026, the forecast dropped to 0.7% from 1%. This isn't just a small revision. It reflects serious concerns about global trade and tariffs. Japan relies heavily on exports like cars and electronics. When trade slows, Japan feels it quickly. What's behind the forecast cuts? The main reason is new U.S. tariffs under President Donald Trump. These tariffs, part of a broader effort to protect American industries, have created tensions with trading partners like Japan. Tariffs make Japanese goods more expensive in the U.S., reducing demand and hurting profits. Companies are already seeing slower sales, shipment delays, and weaker earnings, rippling through the economy. Japan's economy under pressure. Japan has long struggled with challenges like an aging population and low birth rates. Trade has been one of its few growth engines, but even that's under threat now. Major trading companies such as Mitsui & Company and Sumitomo Corporation have issued cautious profit forecasts, citing tariffs and weaker demand. Export-heavy sectors are especially at risk. Impact on Japanese households. This isn't just economic data, it's affecting everyday lives. With lower corporate earnings, job security is fading. Many companies are freezing hiring or delaying promotions, hitting young workers hard. Meanwhile, inflation is raising the cost of essentials like food, gas, and electricity, especially as Japan imports much of its energy. A weaker yen is making these imports pricier, squeezing household budgets. Families are cutting back on travel, dining, and even education. Retirees on fixed incomes are struggling more, while rising household debt adds further stress. If interest rates go up, loan payments could become a bigger burden. People are spending less and saving more, which slows the economy even further. The emotional toll, job worries, rising costs, and uncertainty is becoming a quiet national strain. The Bank of Japan's response. Despite the challenges, the BOJ held its interest rate at 0.5%. Governor Kazuo Ueda emphasized caution, saying the global outlook remains too uncertain for aggressive action. Why not raise rates to fight inflation? Because doing so could hurt growth even more. For now, the BOJ aims to support the economy without adding pressure. The currency impact. The yen weakened after the BOJ's announcement, falling to 144.23 per US dollar, its lowest in weeks. A weaker yen helps exporters by making goods cheaper abroad, but raises import prices for consumers. Currency traders are watching closely. Continued yen weakness could prompt stronger action from the BOJ. Global reactions and risks. Japan isn't alone. Many economies, especially in Asia and Europe, rely on trade with the US and China. As tensions rise, global growth slows. The OECD has warned that tariff conflicts could shrink global growth by up to 1% over 2 years. That may sound small, but it means hundreds of billions in lost output. Business sentiment in Japan. Business confidence is falling, especially among small and mid-sized firms. Many are cutting investment, reducing hiring, or bracing for slower demand. The Tokyo Stock Exchange has seen more volatility. While some tech firms are holding up, exporters and manufacturers are feeling the squeeze. Will Japan enter a recession? A recession means 2 straight quarters of economic decline. Japan isn't there yet, but experts warn it's at risk. If trade keeps weakening, exports could drop enough to tip the economy into recession. The coming months are critical. The BOJ, government, and businesses will need to act quickly to stabilize the situation. Possible policy changes ahead. The Japanese government may introduce stimulus measures, like tax cuts or spending programs, to support growth. Help for tariff-hit businesses could also include cash aid or low-interest loans. The BOJ might take further steps too, including rate cuts or bond purchases, to inject money into the economy if needed. What does this mean for the world? As the world's third-largest economy, Japan's slowdown affects global supply chains, investment, and currencies. Trading partners, especially in Asia, may also suffer. When major economies stumble, global markets get jittery. This can lead to falling stocks, rising bond yields, and currency swings worldwide. Can the situation be fixed? Yes, but it won't be easy. First, trade tensions must ease. Countries need to reduce tariffs and rebuild trust through diplomatic talks and agreements. Second, central banks must strike a balance, curbing inflation without stalling growth. Third, governments should invest in long-term resilience through education, innovation, and infrastructure. Wrapping it up, Japan's decision to slash its growth forecast shows how serious global trade tensions have become. While not in crisis yet, the risks are mounting. What happens next will depend on policy responses, international cooperation, and how businesses and consumers adapt. The world is watching, because Japan's current struggles could become everyone's problem soon.